Hi guys, I'm Nicola McKenzie, founder and mortgage advisor at DM Mortgages, and in today's video I will be explaining to you how right to buy and right to acquire purchases work. So to find out more, stay tuned. Now guys, here at Dunham McCarthy Mortgages, we are a team of property, mortgage and insurance specialists. So what we do with our clients is help to guide them through the mortgage and house buying process, find them the best mortgage deals to suit their circumstances. And that's from high street lenders to specialist lenders. We would compare all of the options to find what's right for you. So head over to our website and book in for a free of charge appointment if you are about to purchase a property or remortgage on a property, and we will be happy to help you. Now also make sure that you subscribe to this channel so that you don't miss any future property finance and mortgage related videos. Let's get into it. So first of all, let's look at how right to buy works, a bit of the detail, and then we'll look at right to acquire. Now, most council tenants will have what's called a secure tenancy, and this basically means that the length of their tenancy is not under a time limit. So most people that are in this position are able to buy their home under the right to buy scheme, if they want to and they can afford to. And the scheme, just if you're interested, was introduced in 1980. Now, the maximum discount, if you are purchasing your house under the right to buy scheme as a council tenant across England is 84,600. So that's the maximum you'd be able to get off the value or the market value of the property. And that's except if you're in London, where the discount maximum is actually 112,800. And that discount amount, it does increase each year in April in line with the Consumer Prices Index. So this video is being filmed in 2021. Depending on when you're looking at the right to buy scheme, just make sure that those figures are up to date. Now, the discount is based on how long you've been a tenant in the property. It's also based on the type of property that you're buying, so is it a flat or is it a house? And it's also based on the value of your home. Now, if you're buying jointly with someone else, then you can count the years of whoever's been a tenant the longest, and the discount would usually be based on that person. Now, if you decide to sell your home within 5 years of purchasing under the right to buy scheme, then you would have to repay some or all of the discount. So that is just a point worth bearing in mind. And the discount that you're entitled to, then obviously it's worth contacting the local authority to find out exactly how much you could discount from the market value of the property. Now let's look at eligibility for right to buy. You can apply to buy your council home if it's your only or main home, if it's self-contained, if you're a secure tenant, and if you've had a public sector landlord. So by public sector landlord, that would be council, housing association or NHS trust, for example. And you have to have had a public sector landlord for at least 3 years. Now, it doesn't have to be 3 consecutive years, but it does have to add up to 3 years in total. Now let's look at how right to acquire works, because like I said, the fundamentals are similar to right to buy in that you get a discount, but the scheme does differ. So right to acquire is for housing association tenants that want to buy their home, and the discount available under the scheme would depend on where you live. And you could get anywhere between £9,000 and £16,000 off the market value of the property if you're eligible. So that's the main difference there. You can see that the potential discount off the market value is much more generous under the right to buy scheme compared to right to acquire. But nonetheless, under both schemes, you are still getting a discount. Now, as far as eligibility goes, under right to acquire, your property must have been built or bought by a housing association after the 31st of March 1997, or transferred from a local council to a housing association after the 31st of March 1997. And the home you want to buy must be self-contained property and your only or main home. Now, if you want to apply for either of those schemes, you have to fill in an application form, either a right to buy application or a right to acquire application from either the local council or the housing association. Now, if your landlord agrees to you using the scheme, then they'll reply back to your application with the price for your home, the details of your discount, and a description of what's included in the price. Now let's look at how mortgages work if you are buying under the right to buy or right to acquire scheme. As a mortgage advisor, obviously we are very used to dealing with people that are purchasing under these schemes. So there's a few tips for you here. Now, if you decide to buy under either scheme, then you will need to apply for a mortgage. Now, it's really important to note that not all banks and building societies will accept right to buy or right to acquire mortgages. And that's why it's really important that you get specialist advice from us so that we can help to make sure that you are approaching the best lender for your circumstances that will accept the scheme, to make sure that your application has got the minimal chance of being declined. So make sure that you get in touch. Now, every bank and building society, guys, is going to vary in terms of their criteria when accepting you under these schemes. Some banks and building societies might ask for a higher deposit. Some banks and building societies, you might not even need a deposit at all. If the discount is great enough, then they might just be happy to accept the discount wholly as the deposit. So yeah, the bigger your discount is, the more likely it is that you might not even need a deposit at all, which is what really makes the scheme really beneficial for some people. And as well, really want to stress though, not all banks will do that. They all take a different view and a different stance on right to buy and right to acquire. So I really want to stress, you definitely need to get mortgage advice and make sure that you get in touch. If using one of the schemes without having to contribute a deposit personally is something that interests you, it is worth bearing in mind if you do have a deposit, then the bigger the deposit you have, the lower interest rates and more options are usually available to you. So it can be advantageous to contribute some deposit, but that all depends on how much deposit you have and how much the discount is. Again, we can look at all of this with you in detail. Now, it's also worth mentioning that you can make a joint application under these schemes with an individual who shares your tenancy with you. So if someone's named on the tenancy agreement, then they can also purchase the property. And you can also do it with up to 3 family members who have lived with you in the last 12 months, even if they don't share your tenancy agreement. But eligibility, ultimately, like any mortgage, will be based on your individual circumstances. So a bank, in the same way as a traditional mortgage, is going to want to assess your income, your outgoings, how many dependents you have, your credit history, etc. Now guys, if you are considering right to buy or right to acquire, then make sure that you get in touch. We can help you to assess your eligibility for your mortgage, and we can look at costs and give you advice and guidance throughout the process. Like I mentioned at the beginning, we deal with lots of different banks and building societies, which is really important, particularly with these schemes, because as I said, not all banks and building societies will consider these schemes for a mortgage. So it helps to have lots of different options available so that we can help you to make the best choice for you. Now head over to our website and book in today for a free of charge appointment to do that, and we can help assess things in more detail with you. And of course, do not forget to subscribe to my channel so that you don't miss any more property, mortgage and finance related videos. I hope that was really useful, and I'll catch up with you soon.